I say we can go ahead and get started with things. So welcome back, everyone. Hope you had a great holiday break. We're 6 days into the new year. I kind of, usually consider the first Monday as when my new year starts, not necessarily on the first. I like to take that kind of full week or week and a half, whatever that ends up being. But yeah, I've been working on some projects. Hopefully, everybody's been spending time getting organized. Hopefully, you had a good time with your family and everything for the past few weeks. We're going to discuss today TCPA, which is the Telephone Consumer Protection Act. They made some updates to this, and it's something that we all need to be aware of because it will change a little bit on how we communicate with our clients moving forward. And that's going to take effect on the 27th of this month. So I wanted to go over it, what it is, what are the changes, are we still, for those of us using CRMs, are we still going to need them after this? And then how to get consent from your, prospects and clients. So before we get started, we have Gary McDonald with Trident True Home Loans. He's going to give us a mortgage update. Gary, how's it going today?
It's going good, Travis. Thanks for having me on again. So yes, good morning to everyone, and thanks for attending the meeting. And Happy New Year from all of us at Trident True Home Loans. Just to give you, and I know I sound like a broken record now, but just to find out, well, how to find us is on the back agent office. I'm going to show my screen right now. I think actually you've got to replace the current. Can I go on there? Yeah, okay, sure.
There you go.
So that's shown. Okay, perfect.
Yep.
So you see the online resource center, do you? Yeah. Make sure I'm on the right screen.
Yep, we can see it.
All
Yep.
right, perfect. So yeah, you just go onto the Rise back agent, and here we are. There's a logo. You click, and all the contact information is on there. So if you ever need to talk to someone, that's how to find us. So again, the usual questions we get as loan officers and quite often as realtors too is about the rates. So I'm going to touch on that again. Um, and so these are the rates that I found this morning about an hour ago, and they have gone up a bit right now. So you're seeing on the conventional side, I've broken it down by FICO score. So the rates do vary quite a bit based on FICO. If you've got a good FICO 740 and above, the rate is definitely better than a 620 by what, 0.6, 0.7%. So it's quite a big difference. And then on the FHA and the VA loans, you don't see any difference from 740 down to 660. They're both around mid to upper sixes, and then they pop up a bit on the 620 FICO score. And this is for a sales price of 700, loan amount 560, LTV of 80%, so there's no mortgage insurance, and it's a single family residence. And these rates don't really matter a whole lot because each person is different and they have different criteria. And we can do things too to get these rates lower. So this is just basically an idea of where the rates are right now, but they can come down a bit. And so this is, I pulled from 2019 to the current time, the rates. And as you see, at the end of 2022, they hit like the mid to upper sixes, and it pretty much stayed constant ever since. I mean, you get the ups a little bit and the downs a little bit. We had a bit of a down in September, and we saw a jump in mortgage applications in September. But for the most part, it's been pretty much steady from the end of 22 to the present day. And so when you're talking to your clients, they're asking you just rates are pretty steady. I mean, we get an email several times a day from the lenders saying, oh, rates have gone up an eighth of a point, they've gone down a quarter point, they've gone up. So it's just fluctuating day by day or even during the day. So the only rate that matters actually is the rate when you lock, the rate when you get into escrow and you say, okay, we're going to go forward now. That is the rate that's going to count. And there's many factors that come into that. And I'm trying to cover those during these meetings that I'm on. So, oops, I went a bit too fast. So last meeting, I covered the credit score and how the credit score affects the rates. Obviously, the better the score, the better the rate, because again, rates are all based on risk. If it's a higher risk loan, you're going to be paying a higher rate because at the end of the day, Fannie Mae and Freddie Mac are going to be selling these loans on the secondary market, and these investors who are going to be buying these loans, they're not going to want a higher risk with a low rate. They want to, if they are going to take on a high risk, they want to get a high rate of return on their investment. And so I covered credit score last meeting, actually a month ago now. And so this week I'm going to cover the debt to income ratio, which doesn't tend to affect the rates that much. It can do under certain circumstances. It's more a question of will they actually get the loan? Because there is a ceiling on the debt to income ratio. Sometimes on the conventional, on a good case scenario, you could get up to around 50%. On the FHA and the VA, you can go slightly higher than that. But if you go higher than that, there's no loan. And if there's no loan, there's no purchase. So it's showing on here the lower DTI, it means a lower rate of return because they're viewed as financially stable and making them less likely to default on the loan. So it's less risk. Higher DTI is a higher risk. There's a higher likelihood of default. They may still get the loan, but there may be additional costs, private mortgage insurance or other requirements. And so, like I was saying, with a high DTI above a certain threshold, you just don't get the loan. And so if you want to get a better DTI, because quite often, when we do the loan application and we do a soft pull, we'll look at the debts that they have. And there are ways in some cases to get things better. So sometimes say like on this first one, pay down the existing debt. With the debt, it's not the total debt that they have. That's not really important. What is important is the monthly commitment on that debt. So even if they owe $20,000, they're not really concerned about that. What they're concerned about is how much they're paying that per month, because that's part of their monthly costs. So sometimes you'll find a loan where it's almost paid off and there's only maybe a few $1,000s left, but the payment is still quite high because it's always been a very high payment. It could make sense to pay off that loan and take that monthly cost off their credit, and that might help. Increase the income is easier said than done, but that's also an option because it is debt to income. So lower debt, higher income always helps. And we always tell clients when they're house hunting, do not take on extra credit. It happens so often where they'll go out and buy some furniture, or they'll get a new car, or they'll do something, and then we'll run credit again later because we've done a soft pull already. We'll run credit again later, and all of a sudden, their DTI is off the charts, and the whole thing is going south. And then the other thing, like I was saying, sometimes with the loans, it's not so much the loan amount, it's the monthly payments. So if you can get, or we can get those loans into a lower rate, it might help as well on the DTI. So these are the ways to improve DTI. And so when you're starting off in the process, and we keep saying this, it's very important to get a pre-approval or to get them talking to a loan officer at Tried and True Home Loans. So we can calculate their DTI early in the process. So we know if they'll qualify for a loan, and if they do qualify, how much. And so it won't waste your time going out showing properties that they may not qualify for, or that they may qualify for more. We don't know, but we do know once we run their numbers. So try and get them to us as soon as possible in the process of buying the home. The sooner the better. And then we can offer strategies like I was saying, with buying down or consolidating loans and paying off small loans that still have a fairly high payment. So there's ways and means of getting this lower. But again, it's better doing it early in the process rather than later. And then there are FHA and VA are more tolerant of a higher DTI. So that might be ways to go that route as opposed to going conventional, which is a more conservative. So when we are calculating the DTI, these are what's included in the calculation. So first and foremost is the housing costs of the new place that they would be buying. And now this part is sometimes hard to calculate because we don't know what they're buying or and all that, but we can still kind of have a rough guess. So we have the mortgage payment, which is the principal interest, the taxes, the homeowners insurance, HOA fees, if they have an HOA, and PMI, if a PMI is required. And then these below the credit card payments, auto loans, student loans, personal loans, all this is going to be on the credit report. So when we do a soft pull, all this is pulled in, and we can see that at the bottom, the child support and alimony payments, they will be mentioning on the application when they apply for the loan. So we'll have all these numbers, and then we can calculate the DTI early on in the process, and that's going to help big time. Now on here, the three big ones that can put a spanner in the works, so to speak, is the interest payment. Right now, rates are very high, so the interest payments are very high, and that's what's stopping a lot of people from qualifying. Homeowners insurance is another one. In some areas of the state, homeowners insurance is either very expensive or they can't even get it, and they've got to go with the California program. And then with the other ones, the credit cards, auto loans, and all the other personal loans, we see sometimes people aren't making that much money, but the monthly payments on the car payments and the credit cards is just way too high. So like I've been saying, it's really important to get them to us early in the process so we can check out this and save you guys time and not have to show homes to people who just don't qualify. And so this is basically the formula of how we calculate the DTI. It's basically the total monthly debt payments, not the debt amount, and that's divided by the gross monthly income multiplied by 100. So here's just a very simple example: is they've got debts of $2,000, their income is 5,000, times 100 is 40%, which under most conditions would be perfectly fine. Like I've been saying, it can go higher. It can go as high as 50 on conventional with the right scenarios, and it can go higher than that even on FHA and VA. But again, try and get them to us as early as possible so we can figure out their DTI and get them qualified. So then you can go out and show them homes. And I was going to show you something else, but Travis has got quite a big presentation for you. So I'll cover that in the next meeting. So that's basically it for me. So if you do want to contact me, or if you have a client who needs to get pre-approved, if you have any questions, reach out to me directly. And you can either write down my information, take a photo of the screen, or just scan the QR code, and that will save my contact information in your phone. So Travis, that's basically it. That's all I've got for this week.
Okay, perfect. Thanks a lot. Thanks for that info. Yeah, rates have crept up a little bit. We do expect them to subside this year. But yeah, we are at about 6 month high right now. So not the best way to start off the year, but again, what is nice is inventory, we have it in most areas. And so being able to get into the house right now without struggling with a lot of multiple offers in most regions um, is a benefit for the buyer. So if you do have clients looking to get into a property this year, um, don't let, have that conversation or, have them speak with the loan officer about the rates and why it still is good to get into a home when the inventory is the way it is, so because we don't want to get into multiple offer situations. So they can get into some pretty creative loan products right now with ease because the sellers, are looking for basically any qualified buyer in most regions. So that's what I'm seeing anyways. Maybe you're seeing a little different. Feel free to throw that in the chat, on what you're seeing in your market area. But yeah, thanks a lot, Gary, and we'll see you next week.
Right, thank you.
All right, cool. I'm gonna share my screen. Okay, so I wanted to cover this topic for kind of two reasons. So, being that this is kind of the kickoff meeting for the year, for the new year, 2025, um, a lot of you are, getting organized. You're thinking of ways to grow your business this year. And, how does this tie into growing your business this year? Um, because this sounds like a pretty big negative when I start going through it, but I actually think there's some silver lining to this, depending on how optimistic you are. So, and I'll cover that here in just a bit. So, we are going to talk about the TCPA. I'm sure you've been seeing it if you are in any Facebook groups, real estate Facebook groups. I'm sure you've seen this topic beat to death. I wanted to cover it as a company. I'm not gonna, disclaimer, I am not a expert on this. I am going to just show you basically, I'm sharing with you what I have found doing some research. So, and then possible outcomes, ways to protect yourself, and how you can flip this around to have a good start to the year with some business growth. So let's go ahead and get started. So what is the TCPA? It is the Telephone Consumer Protection Act. It's a federal law designed to protect consumers from unwanted telemarketing calls, texts, and robocalls. It aims to curb the nuisance of unsolicited calls and protect consumers' privacy. Personally, I don't think this is going to change. I think we're going to get a bunch of spam calls still, a bunch of spam texts, and that's another story. But I don't think that this is going to curb those scammers out there that you know do that kind of business or that type of solicitation. So, and truthfully, a lot of those guys make so much money off of doing that that they'll gladly pay the fine if they even do get caught. So, this does put a little bit of a strain on small business owner, which is technically us as real estate agents, because we will have, people filing complaints and different things like that. So, starting on January 27th of this year, significant changes are taking effect regarding how real estate agents can contact homeowners via phone and text. These new rules, known as one-to-one consent rules, will significantly impact how you communicate with potential clients. So let's go over understanding the new rules. What's changing with the law update and how these rules may affect your business. So prior express written consent. The TCPA has always required prior express written consent for making auto-dialed or pre-recorded calls to cell phones. This means you needed explicit documented permission from the person to receive these types of calls. Now the requirement extends to robotexts as well. So for those of us that use a CRM system for organizing and communicating with our clients, it is something that I highly recommend, to have your database in a CRM so you're constantly in communication with your database. The robo texts that go out, the auto texts and all that kind of stuff are now looped in with this law. So one-to-one consent. The big change is the shift to one-to-one consent. This means you can no longer rely on a broad consent forms or, let me scroll up a little bit, or assumptions that someone agreed to be contacted simply by visiting your website or providing their information. Now you must obtain an individual written consent from each homeowner to receive calls or texts specifically from your business. Um, this did stem a little bit from lead generator websites and things like that, where they would get consent essentially from the consumer visiting the website, but then they would give that information out to lots of other people. And technically, the consumer did not consent to be reached by those people, only by the lead generator. So this was like the loophole of it. And this is why this kind of came about, or at least that's why they say this kind of came about. So no more broad consent. That's what that was. So gone are the days of generic checkboxes on forms that say, I agree to be contacted, that we see on websites and online opt-in forms. You can't assume consent based on website interactions, filling out a general contact form, or even signing a general buyer's representation agreement. The consent must be explicit and directly linked to receiving calls or texts from your specific real estate agency. Think of it like this. You need to get a signed contract from each homeowner specifically allowing your agency to contact them via phone or text. So what they're alluding to here is, let's say you start working with someone and, or they walk into your open house, they want to start working with you, you sign a buyer rep agreement. That doesn't necessarily mean consent that you can start sending them information and all kinds of stuff to keep following up with them via text and phone call. So you would need to get actual consent from them for that. So impact on real estate agents. The new TCPA rules will directly impact real estate agents who rely on dialers or who make outbound cold calls. So I know some of you do that. You might be paying for lists, expireds, and all this other stuff, and you have a single line dialer or two or three line dialer, and you spend a couple hours a day just letting that ring people's phones until they pick up. That this is going to impact you for sure. Um, as agents reaching out to potential clients, whether about new listings, upcoming open houses, market updates is crucial. Phone calls and text messages have been a key tool in your arsenal for generating new business. I mean, a lot of us do this. However, the one-to-one consent rules coming into effect, the way you contact homeowners is going to need to adapt. So it doesn't mean it has to go away, but it needs to adapt. The shift to one-to-one consent, many agents have relied on broader consent forms or implied consent through website interactions, or frankly, none at all. They just, again, you're getting the list and you're just going down the list making calls. However, under the new regulations, such methods are no longer sufficient. So example, imagine a homeowner signs up for a general real estate website notification list. Under the old rules, this might have been interpreted as consent to receive calls or texts from any agent listed on the platform. However, the new rules clarify that this doesn't qualify. Now you need to obtain individual written consent from each homeowner you wish to contact via phone or text message. And I say homeowner in here, I probably should just I should have said consumer. So just switch out the word homeowner to consumer, because it doesn't matter if they're homeowner or not. This consent must be specific to your agency and explicitly state that the consumer agrees to receive calls or texts from you. Here's a link. I can provide this in the replay in the Facebook group if you want to click on that, if you want a reference. So examples of compliant consent methods. So how can you ensure you're obtaining compliant consent? Here are some practical strategies. Lead capture forms. When a potential clients provide their contact information through a lead capture form on your website or landing page, include a dedicated checkbox specifically for consenting to calls and text from your agency. That's really what kind of needs to be added into these consent forms is you are agreeing to receive calls and text messages from insert your name at, Rise Realty, or Trident and True Home Loans or whatever. So your CRM or website provider should have a way to receive a receipt of this opt-in for your records. Now, I know probably a lot of CRMs out there might not have that feature yet. I think they're gonna have it soon. I think they will be, making some changes here in the upcoming weeks and rolling that out. So if it doesn't have it yet, you might want to contact your CRM provider or whatever you're using and ask, hey, what are you guys doing about this? How are you going to keep me safe? Phone conversations. During a phone conversation with a homeowner, consumer, clearly explain the nature of your call and then ask for their express permission to receive future calls or texts with updates. You can even offer them the option of opting in via text message at that point. So that's probably what I would recommend is, hey, can you respond yes to this text message I'm going to send you right now? And that would be essentially your receipt that they are opting in to receive communications from you via phone and text. So maintaining compliance, documenting consent. This is probably going to be, you know, challenging for some. I think that CRMs are going to make this much easier for us to do this and log this. So now that you've obtained consent, it's crucial to maintain proper documentation. This not only ensures compliance, but also protects you in case of any disputes or inquiries. Um, Clear and secure documentation. Ensure your consent records are clear, unambiguous, and easily retrievable. Store consent documentation securely in a designated system, i.e. probably a CRM, and more than likely when all these CRM companies out there make their updates, I'm sure it's going to go into the client profile or something like that. That's what I would be looking for in a CRM, actually. So CRM integration, a reliable CRM system is your best friend for managing consent. Integrate consent records directly into client profiles within your CRM. This allows you to easily track consent status, manage communication preferences, and ensure compliance. Best practices for maintaining compliance, clear consent requests. Much like we have had to make adjustments to our buyer representation conversations over the past, what are we going on, 5 months now? Um, when seeking consent, be transparent about the purpose of the communication. Just like, we spoke about with buyer rep agreements on, showing your value and being very transparent about commissions. You'll want to do the same. You'll want to be very transparent about the intent of the conversation or the intent of the communications that you're going to be sending them. So, for example, simply just saying, I'd like to send you text updates on new listings that match your criteria. Would you like to opt into this? And they can say yes or no on the text message or however you're doing it at that point. So being direct about your intent to communicate in the future through text message or phone calls is the best practice to avoid hefty fines and most likely will be welcomed by your current and future clients. I think it can and will improve your professional appearance with new leads and things like that. If you're asking them straight up, hey, you know, I would like to send you updates on this thing that we're having a conversation about right now. Is that okay? And they'll say yes. And truthfully, I think that that's a good thing because this person, more than likely, I feel like the chances of them working with you are going to improve. If they said, yes, I do want to receive information from you, you probably have a little bit better lead than just having the conversation and then blasting stuff to them over the next 3 months and then they don't respond to anything. So you'll know who is a little more serious and is wanting to receive communication with you. Easy opt-out, provide clear and simple opt-out mechanism. Um, Most of the CRMs have this kind of built in already. And actually the phone carriers do too. If you get an unwanted text, you reply stop and it automatically opts them out. Include a clear opt-out statement in your consent request, such as you can unsubscribe from text messages at any time by replying stop, and then honor those opt-out requests promptly. Um, Regular reviews, I believe that they're saying this needs to be renewed on a yearly basis, which again, probably isn't too bad. I'll go over that in just a second. Regularly review your consent practices to ensure they align with the latest TCPA regulations. Stay updated on any change or clarifications to the rules. If you're in any Facebook groups, that are real estate related, I'm sure you will see this topic all of a sudden uh, you know, come up and be talked about pretty aggressively in those groups. So I recommend getting into some Facebook groups. There's a few out there that have, it's a pretty big community. Most of the information is pretty good. Conversation is pretty good in them. And, you will see things come about where other agents that are really keeping tabs on what's going on or other brokers, they're posting in there, they're asking questions about it. So that's a good way to stay informed. So just to recap real quick before we roll into the next part, we're in the era of one-to-one consent. The TCPA has shifted to a stricter standard of one-to-one consent. This means you must obtain explicit written consent from each consumer to contact them via phone and or text message. Prior express written consent is now mandatory. This requirement now extends to robotexts in addition to auto-dialed or pre-recorded calls. The pre-recorded calls are, the voicemail drop. And a lot of CRMs have that. You might receive it. You're all of a sudden you have a phone message pop up in your inbox, and you're like, I didn't hear my phone ring. That's what that is. That's the pre-recorded calls or the voicemail drop. Compliant consent methods rely on clear and specific consent mechanisms such as dedicated checkboxes on lead capture forms or explicit verbal consent during phone calls. Documentation is key. Maintain accurate, secure records of all obtained consent. I recommend getting a CRM to put your database in, all your new clients, all your past clients, and make sure that CRM is compliant with the new TCPA changes. And then you don't really have to worry about this nearly as much. You just are going to let your CRM do the thing. Ongoing compliance, regular review, and update your consent practices. So with the one-to-one consent rules going into effect later this month, it's going to be on the 27th currently. Attorneys expect an increase in TCPA litigation and in anticipation, strongly encourage businesses like yourself to review and update their TCPA consent policies and procedures as soon as possible. So with our CRM, we have a marketing group inside there that built out all of our automations. They built out all the follow-up plans and all that stuff in there. It's called GGMS. So the CEO, Michael Gallagher of GGMS, he posted in his private Facebook group the other day, and he said on Monday he spoke with DNC.com, which is do not call.com, who informed me that attorneys purchase carrier phone numbers 45 days after they've been dropped. After acquiring these numbers, they wait for text messages and phone calls, then file violations. So essentially, call them ambulance chasers or whatever you want, but that's literally what these attorneys are doing. And that's how they're making their money. Last year, carriers released 24 million phone numbers, which means that the phone numbers in your database are consistently at risk of being inconsistent with the leads you have. Not to mention leads that enter bad phone numbers that turn out to be legitimate phone numbers, but not for that person. So if you do any type of lead gen, I'm sure you have had that happen where there is a phone number, looks like a real phone number, excuse me, and you call it and they say, this is not that person, um, you really have to watch out for those, because it's still a valid number. And you probably want to delete that phone number out of your database because unless that person on the other line consents to receiving phone and text messages from you, you can be in violation, so you have the lead name that doesn't match the lead's actual phone number. So he says 2025 is going to be interesting, but just know that we have your back and are continuing exploring new ways to navigate the new world. So they are making updates on their follow-up plans as well, that are built into our particular CRM. And he works with a number of CRMs. So um, I would expect third-party lead generators to adjust their referral policies and increase lead prices this year. Maintaining compliance with this and the extra protocol they're gonna have to put in place to be compliant is obviously going to cost more money. So I would expect if you're paying for third-party leads and things like that, that the cost could go up. Now's a great time to look at your lead generation practices and make adjustments. I've already received, I think, one or two um, policy updates from third-party referral generators that I have to sign and send back to them if I want to continue receiving leads from them. So I'll probably start receiving a lot more. I'm sure you will too if you haven't yet. Many lead generators, small businesses have predicted that these rules will lower overall lead availability and raise the price of the leads that remain. Some third-party lead generators are already making updates to referral policies, so on and so forth. So CRMs, are they still needed in our business? It kind of sounds like they can be a problem, if we're loading in a bunch of lists and stuff to our CRMs, and if CRMs are doing the auto dials and auto text and all that stuff, it may make you think like you want to get rid of the CRM now and just do everything manually. But truthfully, that's not a viable way to have enough leads in your database working um, and contacting them manually. That's very tough to maintain, especially if you're having to get consent from each and every one of them somehow. So yeah, I think that they're going to be even more essential moving forward. CRMs remain crucial for managing client relationships, tracking interactions, and streamlining workflows. They have a focus on compliance. These new rules necessitate a stronger focus on consent management within CRMs. So if you're going to be shopping out a CRM, there are a ton of them out there. We have a really good deal on ours. If you want, if you're interested in just carrying a CRM, um, uh, I'll talk about that probably in the next week or two. We're making some updates to make it even more affordable so that you have a very nice and compliant CRM with some extra features for your business to put your leads in and your database. So clear consent tracking, automated consent reminders, easy opt-out mechanisms, reporting and analytics, integration with communication platforms. These are things, you're going to want to be looking for in CRMs. As early as this month, we'll likely see CRM enhancements. They're going to be incorporating these compliance features to meet the evolving needs of our businesses. Emergence of specialized CRMs. Real estate there's already so many for us as real estate agents that are pretty much real estate specific. New CRMs may emerge with a stronger focus on TCPA clients offering specialized features. So be on the lookout for that. If you come across any, be awesome, if you share with us, you can throw it in our Facebook group and just say, hey, I came across this. I really like it. It's affordable, so on and so forth. So, to kind of round all this out, this sounds kind of negative, but again, I think that this is a really good way to kind of kick off your year with some business building. So how to get communication consent from your existing database. Personally, I see it as an excellent opportunity to clean up and re-engage your existing database. Some of us have some very big databases, maybe it's a few hundred, maybe it's a few thousand. As a company, ours is tens of thousands actually. So this is, kind of a big one for us. Um, we're always looking for reasons to connect with our sphere of influence database, as well as warm and cold leads from past marketing efforts. I know that's a challenge for a lot of us is like, well, I haven't talked to this person in a long time, or maybe I've never talked to this person. And then just calling them out of the blue, what do you say? And this, I think, could be a good lead in to just say, hey, you know, there's a new law in effect, and I'm calling to get your consent to continue communicating with you. Um, can you reply to this text message or whatever it is? You'll want to pick up the phone to do that and then follow up with the text message. If it's a landline, well, this mostly has to do with cell phones because it's text messages, things like that. But if it's landline, see if you can get their cell phone so that you can send them that consent, or maybe at least an email address so they can reply. That's a little more challenging because yeah, I guess that could be stored in your CRM too if you send it out from your CRM. Um, so, my suggestion is take the next few weeks picking up the phone and directly asking your database for communication consent to continue sending them valuable information. Ask them to reply to an email or text message consenting to communication. Update the preferences in your CRM, spreadsheet, MLS, property drips, etc. So this is a good reach out time for doing this. This shouldn't be a thought of as a burden on your time over the next few weeks. This is an opportunity to clean up your database and connect with consumers who want to do business with you in the future. Just know you are going to get a lot of opt-outs. I'm sure you will. Um, this is part of your database cleansing. So if you have lots of old leads in there that you haven't communicated with ever or in a long time, you reach out to them, they say no, clean them out of your database and move on. I think that that's a positive because we want to we want our database to be full of people that want to work with us at some point or maybe even refer business to us. So getting this consent from them, I think, is a good thing, and having this conversation with them because you're going to cleanse your database and it's going to be full of people who are raising their hand that they want to communicate with you. Um, and you'll know that those are the people that you want to communicate with um, during this year. So truthfully, I think this is an excellent time to clean it up, and get to know your database a little bit better, who wants to work with you, who you should be focusing on this year. So really, I think this is a really excellent, we call it excuse to reach out to your database. Um, we have one Q&A here. One sec. Isn't there a 90 limit? Isn't there a 90 limit for the length of specific communications? Oh, 90 day. Um, I didn't see the amount of time for that. I've seen a year and I've seen shorter times. So I can look that up, or if you want to research it, anybody, and maybe let us know what the amount of time is. And it could also go by industry as well. Um, but I've seen a year, but don't quote me on that. Again, I'm not an expert in this realm. I'm sharing information that I have found on this and showing you how to apply it to your business and the positive spin on it, which is cleaning up your database, and connecting with your database that you haven't connected with over the past couple of years. Maybe it's been a little slow and things like that, and you just kind of let it go by the wayside. Now is a good time to re-engage that. And like I said, you're going to know who you should be working with this year by cleaning this up and connecting with everybody. And it may shrink down your database a lot. Again, I don't consider that a bad thing because if you have a bunch of dead leads in there that don't want to talk to you, you might as well just get rid of them now, you know? So we're going to be doing the same thing on the company side. Um, and then moving forward, marketing wise, you might consider I'd strongly suggest doing marketing that has them reaching out to you saying, yes, I want this information, and then consenting to receive text messages so that your database moving forward from here after you get it cleansed will be a little sharper. Obviously, these people will opt out in time and things like that. And maybe after you work with them, they don't want to talk to you anymore. But it's a good point in time right now to kind of start fresh, with a nice clean database and then adjusting your marketing so that everything is an opt-in and getting consent moving forward so that you can focus on business and not have to worry about being compliant, things like that, because they opted in to receive communications from you. So, um, any other questions or thoughts on any of this? Any ideas? Anything you're doing? Things you have heard about it? I'd be curious if you want to throw it into the chat or the Q&A. Um, but that's kind of what I have for the year, or not for the year, for today, for this topic. So probably next week I'll discuss kind of some changes that we're making to our CRM system, the broker lead system, and things like that. And then we're going to be working on cleansing our database as well. So, as a company, we are also doing this um, so that we know if the leads that we have in there are good or if they're dead and they don't want to be consented to. So it'll probably trim up some costs for everybody, actually, especially if you have text limits and things like that on your CRM system where you get billed per text or per lot of texts. You probably end up trimming your costs a little bit anyways. So that's what I have for today. Thank you for coming on. Hopefully everybody had a great holiday break. I'm excited for this year. Even though the rates have bumped up, I am still hearing and a lot of optimism in people. They're looking forward to hopefully a little bit better economy this year. Even though the rates are high, not everybody, but more people are thinking that the rates are going to subside this year. So I do think a lot of people will be putting, that have had a home purchase, kind of on hold for the past few years because of rates and economy and different things like that. I think they might be, headed in the direction of, hey, let's start thinking about this again this year or, the upcoming years, but hopefully this year. And maybe the down market, the slower market that we've been in for the past few years that was stemmed from the rate increase, is starting to go behind us a little bit. So um, I'd start with your database and how you want to work on your marketing. Feel free to schedule a time with me on my email signature. It says schedule a time with me. You can schedule that up if you want to go over any marketing plans. I do it one-on-one. I don't like to do like a broad one so much because it really should be catered to what you need as an agent and what fits into your lifestyle, what fits into your budget. What can you do on a daily basis that isn't a grind, so you don't hate doing it. So feel free to schedule up a time with me. The calendar's always open to accept appointments, and I love just kind of brainstorming with everybody on how to grow their business. So with that said, I'll go ahead and wrap up. It's about almost 9:50. If there's no other questions or comments, then we'll go ahead and get on with our day. So thanks for joining in, and we'll see you next week. And hopefully, I'll see you on a one-to-one coaching session for business planning. So I'll talk to you later.